Welcome to TradeTheMDI.com. This is John. This reports for the 2nd of August, and well, it was a decent day. We ended up with a little bit of softness to begin with, and that just exacerbated itself. And we reached the bottom and came back up a little bit. Again, right at the 76 line, something we've talked about, but the ABM, like I said, below that 1750, reasonable to short from that point, and then it gives you the extra play areas at the 76, and then obviously we have the rising of all of the ABM values from magenta, white, green is reaching 61% right now. Makes it all easy because we've been in this continued weakness here from the daily signal, and where we got the initial short indication, which happened at the opening of this snake here, which is the orange rising above dramatically over the steel, and always nice to see it when the green also comes from below, which produced then right afterwards a DOC spread, and we've been in the midst of that one, well, since this move right here, which was right at the ABM. So everything turning right back to the ABM values. At this particular point was interesting because we reached this, we were looking to see potentially a bullish cross. We had the green crossing, we didn't have an orange dip below, so we hadn't had a full reset of any kind, but it's always key there when you meet with both green and cyan, because it's short and midterm buyers reaching to, and then we can see a rejection taking place. That could have much stronger push to the lower side. So perfect that it happens right at that ABM value. NQ, still a little bit better. We can see in pre-market though that this is where we're starting to see a little bit of that separation again. Even though they're not connected like they were here, it still produces the same effect, even though there's broader spacing. In fact, usually gives a more pronounced movement. The euro is still stuck within that range, but every time it gets to anywhere in this peak level around 117, it's being rejected. Again, as long as it stays above that upper channel line, which here is around the 115 range, it's like 115.5, and has been for quite some time. That helps support the S&P. I believe that a move below there would definitely exacerbate any move. That's something worth watching because that exchange rate, given the amount of trade that takes place between Europe, is significant. And of course, no change in Fed policy at this particular point. They finally held off, and I think it was probably the President Trump's vocal announcement of wanting to get involved and saying it's ridiculous to see rates rise, that it's only harmful, finally created a little impact. So this dip here, well within expectations from what that short was originally, and no reset of that orange dip going, even though you had little crosses of green. Often what happens with those, they just don't produce any momentum, any push through. Oil, interesting, you had larger buildups, so still within that general range. And again, same situation here as the overall market. It's like you reach these ABM values, and if you can't hold them, it just becomes an opportunity to be short below them. And when now you dip below the green, in this particular case, the other day we closed right at the green, movement below it just provides opportunity to be a little bit safer within a short configuration, particularly when you don't see any resets and you have the very clean separation between the cyan and green. Those relationships are so important because they really give a tie-in between the forces and who's really in control of the forces, as they are like in a situation like this with gold, where shorts have continually been in the rise, but green has also been supporting decently. And what this is even though we're in this malaise right here with gold, what you're seeing though is an improvement in the actual structure as the DOC rises. The closer it gets to the negative 13, the stronger it is. And then with this complete reset of orange, at any point you get these little significant buy configurations, but they only work as long as the steel is above 13.5. What you really want to see from a strong standpoint would have that steel come all the way back down. So this is just filling in the dip below the red line, which was right over here, and the low of that was 115.12, and the low here 115.13. You'll love it when it's like right on that so precisely. So here was the intraday action. Let's squeeze it a little bit. You can see where I've marked a couple of points so you can kind of get a gauge as to how I usually see things. So we ended up with our orange in the gold in the pre-market that led to the lows, and then we kind of like just traded sideways, and I said, hey, you get over the 50%, you know, it's worth being long at that particular point, because we had everything, wasn't a strong setup, but once you get back over there after having been to the lows, there's nothing that you can do at that particular point. We already hit it. Gave a nice little pop, and this is where I started to get interested in it, because again, this is where you have the orange spike, the steel coming below, at that point the cyan just having moved above rift. So it's like, okay, yes, I'm in rising shakeout, so, and I don't have positive extreme. So I was like, not super thrilled, but it definitely to me still rung more short. Went a little bit further upside against, and that's where you produced a really stronger DOC spread, and the exact same thing, hit it again, this time much harder from a short standpoint, and then boom, I mean, just collapsed right down there. So that was exactly how I see those setups. And then the similar situation came right in here, rejection. So it's ideal snake situation here with green below red. Nothing you can do about this situation though, when all of a sudden the midterm buyers turn around and you're like, okay, I'm sort of stuck here. You're right in between, but then you ended up again, another DOC spread, another orange steel split, so another tongue developing, and then also the green dropping below. That becomes another good one. And then sure enough, that one really caved all the way back down to the white candle range, which was fine. We were still expecting the lows to be touched on this anyway, and of course it doesn't always happen right away. Usually can take within the first day or second day. It's just a matter of knowing that we're going to get back to it, which is always interesting. And we even mentioned it when we had the blue coming up here, though there really wasn't anything significant about this blue setup, which is bullish in general, which is why it separates from there, because even within a broader bearish, you know that you can have a tiny bull push within it. Reached the lows and actually made a little bit newer low before the orange gave a secondary dip, and that's what led to that little bounce there. But again, you know, gold below the 50%, we know that we're coming back down, and it did that before the market closed. We actually filled in completely where the gold was, even though that's not necessarily a criteria for the gold matching the opening stance like it is for the white, but it certainly points out that you're going to get a failure. They popped it back up again, but once post-market started, shakeout broke down, and boom, continuation all the way down here. Now we're just below, well, right at the 2,800 level. We dipped as low as 27.99, and that's pretty consistent with what we're seeing from the daily standpoint, and beautiful when we get below that 23%, because it's very easy to see that dark red stays there. And of course, these are older numbers from previous white candles that had existed prior to this, and I just like to have those lines going across, because it just lets you know where key pivot areas from the past were, sort of like just a reference point. I usually pop them in. We can see right now that from a 5K, looks like there's more weakness. You're going to get a short-term pop from this dip below the negative 22 here, but unless orange really comes down strong, which it can, still within a weak mode, and particularly below the 23%, it's just a matter of waiting there. A little upside push to you, because you do have that falling highs, though it looks to be stabilizing right about here, so that could put the kibosh, so to speak, on any turnaround at this particular point. But not bad overall. I think it was pretty clean, and we're starting to get that bigger movement. Surprisingly, we talked about a growing potential volatility here in August, and it's already starting out to do just that. But you're going to need to see some significant, 20 plus point moves here to really start to add to that. I don't want to say summer craziness, but we're getting close to the dog days of summer, and that always produces some interesting behavior. So we'll see how it plays out in general, but overall that weakness that we're seeing from a daily is expressing itself right now in the pre-market. We should be able to get a pullback up at least to the 50% at some point. If you can't get there, that should bring us right back down to the lows and potentially even make lower ones. So that's the long and the short of it for now. As always, though, trade well, and I will post relevant charts like I have been on the Skype chat. Keep everyone updated. Trade well.